Okay, so this section is where it starts getting a little bit juicy. We're looking at trade entries. So in all the previous videos, we've figured out how to read the market and say here's levels of potential probability where the market could turn. We know the bias of direction on the higher time frame. Something has happened, and now we're waiting for a pullback within this level. So for example, right, we know what a break of structure is. We know what a change of character is. We know the stock market is fractal, so we know what happens on the higher time frame must happen on the lower time frame as well. So with these things in mind, the structure for entering a trade is the exact same on a lower time frame. The market is fractal, so I've said whatever happens on the higher time frame must first happen on the lower time frame. So in order for the market to create a new low on a higher time frame, it has to do it first on a lower time frame. In order for a market to change direction on a higher time frame, it must first do it on a lower time frame. And that is absolute. That is there's you can't question that in any way. That is just exactly what has to happen. Regardless of opinions, ideas, or what you've been told in the past, that has to happen. End of story. So if we look back, right, I'm going to take this range again that we've been looking at on NASDAQ. So we identified again earlier on that there was a 1 hour change of character. So we know this to be fact. There's a 1 hour chalk. We identified that there was a low, a lower high, and then a lower low that ran this down. Understanding that this was the highest point that broke this low to create the change of character in the higher time frame, we identified our order block, which was here. So we know, and if you trade ICT, there's a fair value gap here as well, but to me that's not as reliable. It probably would have given you a few false signals in there. So let's take the order block as our key example here on this one. So we're looking for, we have an alert set on this order block. We say when price comes back up into here, we want to start watching what's actually happening within this level. And this is going to give us a really nice example actually, because I got caught with a trade for a break even on this. Following my rules to a T, it just behaved in a certain way that made me move my stop to break even because and I'll show you based off all the things that we've done already. It'll give you that indication. So we have a 1 hour. We drop down 5 minutes, for example, and we see price comes up into this level. I'd like it to load it all. So we have price comes up into this level, makes a low, fails to make a higher high, and so on. There is nowhere within this range that I can see a valid shock. Is there? There is. And there's a valid trade there, actually, funnily enough, now that I just noticed it. So I'll give you a rundown of what I mean by this. So say we take this leg here from here to here. We have a high that creates a break of structure. So what is our strong low here? Is this one here. So this high fails to make makes a low, fails to make a higher high. So you can see this here if we zoom in. Fails to make a higher high, doesn't close. That low is ran. That's our standard rule that's in there. This low then makes a higher high, which we can see here, and this low is then wicked. So yeah, it takes out price there, but we didn't really have much of an entry here anyways. This low then fails to make a higher high. Technically it pulls back up into this order block that did its job, so I could short that. It's a valid short there. I could put my stop above the high that did its job. This is not the main trade. I just want to show you this in more detail. So let's just say that's our stop, and we run the low that needs to be in there. So I just want to say it's this one. We say it's around a 3 to 2, so it's this low here. But that's not valid. I just want to show you the process here in terms of what we're actually looking at. If it ran that low and didn't close aggressively, which it didn't really, my stop would be at that high, so that would be a break even. Comes up, fails to make a higher high, so again probability is this low will be ran, which it is. So this is really more of a consolidation range, and that is why the order block is so important, because it hasn't actually tapped into anything that I want to trade. So comes up, makes a higher high, fails to make a lower low, which means it's doing its job. So this is our strong low. Sorry, this is a weak low, so we know this could eventually be ran. This is a strong low, it did its job. So price came back down and failed to run this low. Failed to make a higher high, but then it failed to make a lower low. Technically it ran this low, and then it made a higher high into the order block. So once we get into the order block here, this is the area that I am now interested in, because we've identified this as the level that we want to trade. So I'll drop down to the 1 minute chart and we'll find our levels here. And so we can look through this and see what has actually happened here. So if we run through this, there is not much in terms of an entry here, and I think I actually might not have taken anything from this level. So let's see here, and we have a low that makes a higher high, goes all the way up. There's no highs and lows there that I can identify clearly. High, low, low, high, higher high. So this is not valid because this is the low that did its job. So that pushes all the way up. So until it breaks this low, we have nothing, which it does here. I can switch back up to my 5 minute chart. Let's just see what happened within this level. So came down, made a low, and it broke all the way through. So, you know, you're not going to chase the trade going all the way down, but I know based off previous data that I want to find the last bullish candle that made that was broken to make this higher high. So I'll just see if we have anything on a 1 hour, which we do. So this was a low just here on the 1 hour. So we can see here, this is our low that was broken, made a higher high, was broken, and then we identify our order block, which is here. So we can see we've allowed the market to do what we want it to do. We've looked for our order block, and then if we drop it down, price comes back up to our order block here. I can identify the order block on a lower time frame if I need to. So let me see here. There's the last bullish candle before price was broken down on a 15 minute, which is the lowest one just here. And again, just identifying that, refining it down. Then if I want to enter, this is where my theory comes into play. So we have price comes into the order block again, and now we need that change of character out of this section. So we have a high, which was here, as a break of structure on the 1 minute chart, and this was the low that created that break of structure just here. This is not clicking in effectively for me. So then we have price comes up, we can look up again, fails to this high, fails to make a lower low, so we know this high is going to get ran. So that's a nice little precautionary one there for me. It gives me indication that I don't want to enter anywhere just here. Price comes down, fails to make a higher high, but this low is then broken to give us a break of structure to the downside. Where is the order block for that? And because it's confirmed with a nice aggressive candle, I can enter in short off of this. My stop goes above the high, and then we can target our extreme lows down at the bottom. So again, if I zoom out to a higher time frame there, we can just locate where our probabilities are. My probability was for this low here, which I'm fairly confident is going to reach tomorrow on Monday. But this is something that you can repeat over and over again. And to make it even more simple, when you're holding a trade, I can use the exact same rules to define if I'm staying in. So if I look at this trend going down, so I've had a high that's made a low, failed to make a higher high, made a lower low. So if I was utilizing a stop loss here, this is we'll say this is where my original stop is, just to give it space. This low fails to make a higher high, makes a lower low. My stop will be a tick or two above this high, which will be protected. A little bit anxiety generating there as it comes back, but it did not violate the high, and that's why I always want to give it a couple of ticks just above highs and lows, just for that reason. Makes a new low, fails to make a higher high, So then I would move my stop to this level. Comes down, makes a low, fails to make a higher high, my stop goes down to this level. Makes a new low, fails to make a higher high, my stop can go down to this level, and I can get taken out there. But then, like we seen earlier on, we have multi-time frame. So I will be looking more in a downtrend like this. I will be looking more at my higher time frame. So we have a 5 minute there, makes a low, fails to make a higher high, and then I can drag this stop down to here. So higher time frame again is stronger. If I can find higher time frame highs and lows, I would be more inclined to use them, especially when the market is trending quite aggressively like this. So you have a low down here, fails to make a higher high, makes a lower low. We can pop this down here. You can see price doesn't close. If price doesn't close, what's our expectation? The high that created the low will be ran, which is exactly what happened here, and then market reverses. So I'm still confident that it should go lower. I just don't know how far it's going to pull back on this trade because the market direction is bearish. We can go over this again and again. So even for example, right, if I was looking at this and said on a higher time frame, price came down back deep into the range of this, and technically this made a 15-minute chock, so it does want to pull back, might want to sweep the highs here. So if that was the case, I could then say, right, well, let's look for an entry. So where's our entry? Our entry will be down here at the bottom. So where's the next place it made a high and a low? I have a high, makes a lower low, makes a lower high, fails to make a lower low, makes a higher high, doesn't break it out, wicks it. We can see here then it runs the high nice and aggressively. Where does it come to? We have our order block just here. So the last bullish candle that was ran before the high, and I can enter off the entry into that, put my stop below the low, and target a high that's up there that might draw value. So we have a few highs there that we could target, just like this one here. So again, our entry criteria has to first of all fall in line with the overall direction of the stock market and what we're looking at. Then it has to give us the same information based off changes of character, changes of structure. I can utilize 5 minutes if I want to see good value in terms of what I was doing there. So again, for this entry, I could say, well, right, there's a 5 minute chock here. Where's our pullback going to be to? And just like I said earlier on, let's drop it down to 1 minute. Let's find an order block for it to pull back to, which was this one here. And that gives us a really nice risk to reward entry on that one for that entry. So again, it's combining everything together, just utilizing the same rules over and over again. I would not recommend just looking for every single chock and changing it in the opposite direction, because technically on a 1 minute, for example, like this one here would have got you caught. There was a short, a pullback up created a chock, and there was an order block here that I pulled back into to look for a long, but this higher time frame high was stronger than this pullback, and that's why it continued lower. So we do have to be careful of that. We do need to have a higher time frame of reference for areas that we want to basically trade from. And once we find them and it gives us that information of how we want to trade, then we can execute our trades within those levels. It's based around patience and looking for the absolute correct setup that's going to help you in there. I hope that makes sense, and if you have any questions, just send them in.